Yo, what's up you guys? Welcome back to a new video. And in today's video I do want to speak about the US CPI data that was released yesterday, and I also want to give you guys an update on the dollar index, gold, Nasdaq, the Dow Jones, as well as Euro USD from a technical and fundamental perspective. If you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you do enjoy the content, please consider smashing that thumbs up button as well. Now don't forget about the giveaway that I am currently running, where I will be giving away 2 live funded accounts, and it's very easy to enter. All you need to do is head over to my Instagram, go and smash that like button, comment 2 of your friends, then make sure that you are subscribed to the YouTube channel, and that will automatically give you a qualification. Now a lot of people has been saying, some people are commenting every day, the same stuff over, look, don't worry about that. There's something I am going to use to run through those names and just remove some of the duplicates in there as well, so don't worry about that. And then also, apart from that, once the YouTube channel hits 6k subs this month, I will be adding an additional 2 more live funded accounts that I will be giving away. These accounts will be paid for by me. It will also be traded by myself. I will pass the accounts for you. It will be in your name. Once they are live, you will be able to trade these accounts live, and then you will be eligible for 1 month free signals in my signal group there as well. Now let's just jump straight into the information there as well. Now yesterday what we had was CPI data come through for the dollar index. Let me just filter this very quickly now, and this also all came through on Valentine's Day, and happy Valentine's Day for everyone out there as well. Now the CPI data came through on Valentine's Day. The CPI data is the consumer spending index, which measures what the average consumers spend on the baskets of goods and services. This is also an indicator used by investors to measure inflation in the US. Now normally if you get a higher reading or not as much of a lower reading compared to what we had previously, that tend to change the market sentiment. Basically what that means is that if inflation dropped to this level over here, let's say inflation was there, now inflation drops to this level, right? Now the gap between where it was and where it is currently now is quite big, giving enough room for the Federal Reserve to say, okay, we could potentially lower the interest rate, or we could potentially just raise the interest rate by a little bit and not too much, which then in essence make investors not want to get too much into the dollar, as they are very uncertain about whether their gains or returns on the index will be sufficient or if it will drop. So they would rather go and invest in gold, precious metals, because we know that the dollar index is the gold is priced in dollars. And there's a negative correlation. So when the value of the dollar index goes down in value, the price of gold tend to increase, and vice versa. And you normally see investors then invest in gold, or they invest in the stock market, because a lower CPI reading at the end of the day is good for consumers, because they would then in essence be paying lower interest based on the Fed's sentiment to reduce it, meaning they'll have more money to spend because they will be paying lower on their repayments due to lower interest rates. Now basically what we saw here was we saw the CPI go from 6.5 to 6.4. so basically the drop that you saw over there was basically like that. Now keep in mind that the market was celebrating, everyone was going, yes, inflation's coming down, we are all excited and all of that stuff, right? But I think the market was reacting to it, too quickly, and we saw the dollar basically sell off because investors now anticipated the Feds not to hike interest rates as aggressively. Now December we saw a 6.5, January we saw 6.4, so that means the Dow Jones in anticipation was, or investor sentiment was sitting at 6.2, so it basically came through higher, meaning that inflation is not cooling down at the level that the Feds would like it to reach their target for 2023. Now it says here the US consumer price rose briskly at the start of a year, a sign of persistent inflationary pressures that could move the Federal Reserve to raise interest rates even higher than previously expected. Now, the expectation was that the Fed go in with a 0.02, a 0.25, which is a quarter of a basis point hike. The reason for that was basically the Fed had room because inflation was showing some signs of slowing down, of cooling down, and the Feds came in. They're like, you know what, inflation is coming down faster than expected. We are gonna soften the landing a bit and go in with a 0.25%. But now, with last month's report coming from December, they saw inflation's not dropping as nicely as it did before, because before we went from 6.6 to 6.5. Now we're at 6.2. Sorry, I'm looking at the wrong thing over here. So here we went from 0.3. Now I'm looking at the complete wrong thing. I think I actually closed it. Here we go. This is what I was looking for. I don't want to confuse anybody over here, but here you can see we basically went from a 7.75 to 7.11 to 6.45. Now you can see the jumps in between from October into November into December, and now the jump between December and January was not sufficient enough. Now, because of that, the Fed was obviously able to hike interest rates softer than before. Why? Because of the gap or the jump in the inflation that the market had came through. So here we had a massive jump from 8.2 to 7.75. From 7.75 we went to 7.11. Then from 7.11 we went to 6.45. But now from December to January it was only a 0.04%, which is not sufficient. So now, instead of going in with the 0.25 interest rate hike, the Fed is probably more likely, as mentioned over here, that we could potentially see a 0.50% basis point hike. It says here the overall consumer price index climbed 0.5% in January, the most in 3 months, which is what I've just explained now, and bolstered by energy and shelter cost, according to data out Tuesday from the Bureau of Labor Statistics. The measure was up 6.4% from a year earlier. Now, I don't want to confuse anybody too much. Basically, what that means is now we have a market that is not showing signs of cooling as it did before. That means that we can expect the Feds to become a little bit more aggressive with the interest rate hike. Then instead of giving us a 0.25, we could potentially look forward to a 0.50, which is a half a basis point. And the only time we are going to see that basically is we do have, we've got another CPI report that we can look forward to. But here we go, on Wednesday the 22nd of March. Again, that will dependent on that CPI report, but we can expect the market to react to that as well. Now, today we've got retail sales also coming through. We've got core PPI, purchasing price index, and then we've also got the PPI there as well. Now, I do expect the market to react to this all positively, and I do expect also, based off the CPI data, the market's more likely to drag the dollar up to the upside, potentially completing that correction as we've been speaking about on the monthly, which is basically this monthly correction to the 0.382, and then from there we could potentially measure how things goes as well. Now, the stock market didn't react to that data that well. As you know, if you've been here long enough, you know that there's a negative correlation between the dollar index and the stock market, and as the dollar index increases in value due to positive fundamental data, you normally expect the stock market to go the other way as well. Now, without any further ado, let's get straight into the technical information. Now, I've said this before and I will say it again. Okay, we normally expect a pullback to the 0.382, and we're going to use that as our target level. Now, the last time I did spoke about this market, I said we create an equal low, that we can expect that continuation or that move to the upside, and that is exactly what the market had given us. Now, here from a daily time frame, again, the market is currently consolidating here as well. The market printed support, broke below supports, now testing it as a resistance. The market is also trading at a previous support that I had created there as well. Now, like I said before, I do expect the dollar to increase in value, and the best way to approach this is wait for a clear break above that. On the retest, you can definitely start looking for that buying opportunities on the dollar index there as well. Yes. drinking water out of a Powerade bottle. That is life, my friends. Nothing tastes better than water. Okay, next up we've got gold. Now, gold again, also, gold is probably also gonna have to give up the gains, and once again I do expect a slight pullback. Gold also now printing an equal low. I do expect a slight pullback on gold and then continue this move to the downside there as well, potentially hitting that low in the market over there as well. But we are short-term traders, so we're going to go with this, as this was a very strong structural level in the market there as well. Just coming back to the index, yeah, as well, we could potentially see the index first move down before going higher. The reason for that is we do expect a correction on here as well. Now, next up we've got the Nasdaq 100. The Nasdaq also, if you look at the price action, it's quite, it's quite choppy over here. We've got the resistance that the market printed. We also got this level of resistance got broken, is now testing as support. We did get into this buy here on Monday and was able to close it there as well. Now, the Nasdaq, if you look at short term over here, we do have the potential of the market printing this inverted head and shoulders. So I do expect the Nasdaq in the short term to continue higher, and then from there monitor price action once again, see what we can get from that side there as well. The Dow Jones also looks like a graveyard. You see over here the market printed support, the market also printed resistance over here as well. Now the same thing over here, however, I do expect the Dow Jones also to go slightly higher, as I expect the dollar index to continue slightly lower unless we do get a breakout. Then by all means, and this won't be one candle, again, if the dollar breaks out first, then we're going to move the opposite way on this side. As you can see, markets are trading sideways. This does look like an inverted head and shoulders pattern here on Euro USD, but I also just see a sideways moving market. This is just bad. Like why would they do this to us? Like, why would you do this to someone? Like, why would you go and print this massive liquidity wick and then just come back down again? So basically what we have here as well, like I said, we have to be reactive and not predictive. We need to learn to adapt to the changing market here as well. In fact, let's take it all the way till there. I do expect, like I said, because due to the weakening in the slight because of the dollar index is stuck in a consolidation, I do expect some of these currency pairs, well, all of them that are trading, unless they have weakened, like NZD printed some negative data and basically took me out of 2 trades, both NZD related, because of, even with a weaker dollar, the NZD was weak, and that made the NZD weak against the dollar, if that makes any sense. So sometimes, just to give you some advice, sometimes you get Euro USD and the USD could be doing nothing, but if there's negative news for the euro, then you can expect the market to move lower. You go like, but why is this? The dollar is not even moving. Well, it's always due to a lower. Also, one thing that has been a myth is when the USD ZAR goes down and people are like, why is the ZAR strong? No, the ZAR is not strong. It's just the dollar is getting weaker. Not there's no reason for the ZAR to get stronger. Like, I mean, if you go and compare what $1 was last week and look at what it is 2 weeks ago, go look at what it is this week, and you'll understand what I'm speaking about. But yes, that is it from my side, guys. Once again, thank you for your time, and don't forget to get sharing on the video, get your friends involved. We'll be giving away those accounts at the end of this month. Thank you for your time, and as always, cheers for your ears and happy trading.